Our top story, of course, is China and the trade dispute. The Wall Street Journal is reporting this morning that Beijing is preparing new policy, promising greater access for foreign companies. This is a sign that China may be trying to ease trade tensions with the United States. Joining me right now is the Assistant to the President for Trade and Manufacturing Policy, Peter Navarro. Peter, it's good to see you this morning. Thanks so much for joining us.
Good morning. I enjoyed listening to the conversation on the set there about interest rates and things like that. I mean, I'm very bullish on this economy, and there is concern that the Fed has gone too far too fast. I think if we can get the interest rate policy right, we're going to have the next leg up on the bull market. But this is a great economy. So let's talk a little bit about China, which I think is which is the topic du jour.
Well, Peter,
right
the top story in the Journal is the headline is this: China is open up in policy shift. Beijing to drop plan for high-tech dominance amid U.S. criticism. Let more foreign firms in. This is the headline in the Wall Street Journal. Can you tell us this morning what the plan is and how China has changed its behavior? Where are we?
Well, I noted both Dagan's skepticism and James's skepticism about China's intention. If you go to the end of that story, there was an interesting quote by James Waterman of the Chamber of Commerce saying that it's important not to get caught up in the broad slogans that China might have, but to have verifiable actual results. What I would say to people watching this show who are investors is that don't get hung up now on the day-to-day news about what China's saying it's going to do or whatever. I would just focus on March 1st when we'll have a complete offer from China that will be negotiated behind closed doors, not on the front page of the Wall Street Journal. And what we're trying for are two objectives that we have to hit. One, of course, is the market access, which is to buy more stuff and let us get into their markets without the forced technology transfer and all the other kinds of things they do. But much more importantly are the structural issues that relate to the 301 investigation that Ambassador Robert Lighthizer did. That is the cyber intrusions, that is the state-directed investment, that is the intellectual property theft. If we don't solve both those problems, we got to hit both of those problems, structural and market access, we won't be able to move forward as an economy into the future. So that's what the stakes are. And I say again, it's like there's going to be a tendency day to day to kind of handicap whether we're going to get a deal or not get a deal. But if you just look at the front page of the Wall Street Journal, you're going to be deceived by that because the real action's taking place behind closed doors, as it should, with tough negotiators like Bob Lighthizer.
So you're playing down this story, basically. We shouldn't read too much into it then, because we need to see an overall complete response from China come March 1.
Yeah, that's exactly right, Maria. Those kind of announcements should be taking place in the negotiating room. So, you know, there's going to be a tendency here for China to run a campaign, essentially, to make everything look good and try to create an inevitability of an agreement. But from our point of view, what we must do is hold fast, stay tough, and focus on the prize. The prize for this country and for the world and for China, really, is complete structural reform to put an end to all these practices which are disrupting the global economy. And I think where we are now is with a very bullish Trump economy, very bullish. It's good for the markets. The only thing that can mess that up, in my judgment, is not China, but interest rate policy. If we get that right, we're going to be fine. Investors shouldn't get hung up on the China trade. Wait till March 1st and see where we are after some tough negotiations behind closed doors.
Well, most people don't realize that this story is more than just trade. It's not just about China buying more stuff from the United States, like soybeans. Did they make that purchase in soybeans?
Yes, but here's what's interesting. You know, prior to our tariffs going on, China began not buying our soybeans as a way of retaliating against us. Here's the fact, Maria. They buy those soybeans regardless. They need those soybeans. China is the hog capital of the world. They eat 50% of the world's pork. That pork is fed by soybeans. And if they don't buy our soybeans, they get inflation. They get inflation. They get riots in Tiananmen Square. So again, those purchases are important. We want them to buy our soybeans, our coal, our LNG, our manufactured goods, more importantly, our autos, all of that stuff. But what's really important here, besides market access, is the structural. And these are so serious issues for this country. If we lose our technological base, the Chinese espionage and Chinese state-directed investment, we're not going to have a country. And so this is a historic moment. I would reach out to everybody covering this story, and you do a great job on your show, Maria, probably the best on cable news. Journalists need to be responsible about the historical significance of what President Donald J. Trump is trying to do, because without him, we wouldn't be having this conversation.
No, I understand. He had real courage doing this.